We are live. You can start, sir.
Here's a very, very good afternoon, or rather a good evening to everybody. On behalf of the Corporate Laws and Corporate Governance Committee of ICAI, I, along with the Vice Chairperson of the committee, Sri Durgesh Kabraji from the Western region and Mumbai in particular, extend a very, very warm and a very hearty welcome to all of you to the second edition of MANTHAN. So these manthans are basically, as the Sanskrit word denotes, it's all about churning, shaking or stirring. And for what reason? To learn more. To learn things that we possibly have missed out, to unlearn a couple of things that maybe we were not right about and to relearn. And in this session today, we speak about pending litigations. Before I proceed to the entire event sequencing, I would like to request Vice Chairperson Sri Durgesh Kabraji to address the audience. And I also take this opportunity to extend a very warm welcome to our speakers for today, which is CA Satish Vaidyanathan, who's going to talk to us about auditors' responsibility on pending litigation. It will be followed by Advocate Shreyas Jaisimha of Arna Law, who's a very prominent and a very seasoned legal professional, who will be walking us through the board oversight on what a company's safeguards on litigation needs to be and how to go about it. This will be followed by a very interesting demonstration of a tool that's called Probe 42. The Committee for Members in Practice is a committee of ICAI that tries and gets tools to chartered accountants, because we're all in a digital era and we need a lot of third-party evidence on whatever we're doing, and Probe is one such enabler which helps you to get public domain data from MCA and from other sources. So the CMP had actually signed up with this along with CLCGC with Probe to offer up to 7 companies free to chartered accountants, to all chartered accountants. So if you have 10 partners in your company, then it's 7 into 10. You can probe or look at those company details for free, after which a standard charge applies. And we're thankful to Probe for this support. Probe is not the only service provider. There are others as well, and we are constantly endeavoring to identify more such people who can give us tools to make our life easier. So these are going to be the 3 distinct parts of today's Manthan, and I really would like you to stay back till the end, because the Probe also is an interesting demonstration that you will see. So it's now over to Durgesh Kabraji for his introductory remarks.
Thank you, Chairperson Shri Priya Kumarji. Lady to lead from front, the CLCGC. It is second year of where she is leading this committee, and what she has given to us in the committee is that we are now having our good presence at the Ministry of Corporate Affairs by helping them out in version 3 and LLP filings, where we are trying our best to resolve all the queries and help them out technically also, that whatever problems are being faced in filing of the various forms and returns at the new version, that can be dealt very easily. And where Madam has done exceedingly well by guiding the ministry as well as supplying the manpower from our side. As far as the CLCGC is concerned, you all are aware that beside doing various things, we are continuously representing the institute and the professional view and thought process to the Ministry of Corporate Affairs with respect to the Companies Act and other corporate law wherever necessary. And we are making them aware that how a chartered accountant can be a best solution for if any wrongdoing is done and that is to be complied with, then how the chartered accountants can help them to comply with the law of the land. Friends, today what we have done with the Ministry of Corporate Affairs, that we have already represented with respect. We have already had a discussion with them about the vacancies available for the independent directors, vacancies available for women directors, and also there are many charges which has been satisfied, but the modification or satisfaction at the site of the MCA has not taken place due to some or other reason. So what can be the solution for this? We are going to make our proposal to them. They have told us, you send your proposal. So we can look into it and how the ICAI can help the members as well as the Ministry of Corporate Affairs under the leadership of Madam that we are going to do. Second important thing, I just want to convey that today the subject is auditor's responsibility with respect to the corporate pending litigations as well as board oversight and auditor's responsibility. So the very important subject which is being chosen in this MANTHAN series, of which the chairperson would be talking. But since there is a name of auditors, I must tell to all of you that very recently you have heard about the case of Cafe Coffee Day as well as DHFL, and earlier 2 more cases which have been dealt by the NFRA. So just to create awareness, which is a domain of ours, the audit is a domain of ours, and the quality is must. The institute has come out with the audit quality maturity model, and which is being made mandatory for all practice units who are doing certain categories of companies audit, which is of the nature of listed company or the banks and insurance companies. The branches of the same is not included, but the multi-state cooperative banks are included, cooperative banks are not included. Then I must tell that whoever is the auditor of these kind of concerns, then you need to get the AQMM review done. It is self-evaluation model as well as the it is required to be peer reviewed or AQMM reviewed, and if it is not done, then it's a non-compliance of what is being made mandatory by the ICAI. Today, it is most important for all of us that we adhere to quality of the audit. We adhere to the various requirements of the various standards on audit, which are 46 in number. 38 plus 7 plus 1, 1 is SQC1, and 7 are review standards, and 38 are the other standards on audit, which are mandatory in nature. And if we do not perform our duties on the basis of these 46 standards, I think we are not complying with the law of land, and we are responsible for any wrong thing which happens in the corporate world if our audit are not of that expectation, and the stakeholders raises the fingers on us, and we are facing the problems. So my humble request to all of you, you are aware of what kind of penalty have been levied on the chartered accountants in these 2 cases specifically. 4 chartered accountants in case of CCD, and the firms also. The highest penalty on the firm is 1 crore, and all individual chartered accountants have also been charged with the penalty. Likewise, and they have also been debarred for 5 years or so. And in case of the DHFL case, very recently the judgment has come, and 7 chartered accountants have already been debarred for the same. So my humble request, due do take care with respect to the audit quality. Audit is a serious business. That is was told by our immediate past president Debashish Mitraji, and it is for the serious people. If you, as a professional brother or sister, not serious about the audit, please don't accept. There are many other opportunities for chartered accountants in the field of consultancy where you don't need to put your signature and do those kind of activities rather than, if you are not serious about audit, doing the audit. My thanks to the chairperson for giving me an opportunity to interact with all of you virtually. And I wish that all of us do good things with the ethics, with the values which have been cultivated over the time among us through our code of conduct, and we follow all of them. Thank you very much. Thank you, Chairperson. You're on mute.
So thank you very, very much, Durgesh, for setting the context. And incidentally, CA Durgesh Kabra was the first convener of the Center for Audit Quality, which ICAI had established. And he did this job aplomb for 3 years. And the audit quality maturity model, the first of its kind in India, was actually his brainchild that he helped develop, evolve. And today it's become mandatory for auditors who audit listed companies. So coming to the sessions for the day, and once again, let me extend a very warm welcome to Shreyas, who joined us a minute later. So welcome Shreyas, welcome Satish, and welcome Darshan. So in terms of litigation, so you might want to ask us, why did we actually pick this topic at all? We picked this topic because it's so underspoken. We forever keep talking about aspects on audit, and as you're well aware, we are the Corporate Laws and the Corporate Governance Committee. So our function is not just to service members of the profession, but it's also all members across and all stakeholders across the ecosystem to ensure that we have better corporate governance. And as chartered accountants or even heads of institutions, stakeholders, boards, etc., typically we are very comfortable with something that presents itself as a number. So, you have a liability booked, a liability unbooked, an asset which is booked, unbooked, expense, incomes, etc. And they're also metrics driven. We find it easier to understand and easier to implement, whether it's internal controls or audit protocols. But somewhere along the line where we sort of get a little, dazzled or like the bee stunned by the headlights is when we come across qualitative aspects which are not clearly capable of a quantitative definition. So, for example, contingent liabilities. I mean, it's an estimate after all. Now, the ministry obviously cognized for this and brought in a rule that says, as an auditor, in your audit report, you have to discuss and report pending litigations. So why is this important? Because a pending litigation can virtually destroy a whole balance sheet. And I speak of a balance sheet, not just in terms of liquidity, which we've always, not in terms of solvency, which we always speak about, but even in terms of liquidity, it could impact us. So which is why we picked pending litigation as a topic. And having said this, I think there's been a huge transformation in the monitoring of audits also. We've seen NAFRA orders coming like, just bullets off a gun. We're seeing a whole lot of orders coming in. But fundamentally, what's it all about? It's all about compliance with standards on auditing. It's compliance with ethical conduct. And if you look at most of these orders, that's what they speak about. How we have failed in certain cases to comply with the relevant standards. And the standards, of course, say it all. If you're broadly audited by the standards, then I think you're 90% okay. And the 10%, of course, you sort of look at the picture of God behind you and sign, but that's anybody's risk. So having said that, this is welcome to this webinar on litigations. And another thing that's very clear is why are we called as statutory auditors? Because we've been appointed by a statute. And I think with that appointment from a statute comes a tremendous responsibility to deliver audit quality. And it's in that sequence of things, it's important to go through this webinar. Now, in terms of boards or CFOs and CEOs who are listening to this webinar, in fact, I got quite a few messages this morning, very surprisingly from members in industry who said they are attending this program because they say, look, we are as much blinded on this aspect as the audit profession is. And whose responsibility is to first disclose litigation? It's that of the management. Whose responsibility is to manage litigation? It's the management. How do managements work to improve outcomes of their litigations? How do they ensure timely closures, etc.? It's that of the management. And it's in that context that we have three different speakers. One, we have Advocate Shreyas Jaisimha, whom I will introduce shortly. We have Satish Vaidyanathan, and as I had mentioned in the beginning of the webinar, and for those who were not there then, we also have a demonstration of a tool called Probe. And what I found really impressive is that for about 300 rupees, you get a whole list of data of the company which you want to audit, review, or even forensic audit. And I think that's a really small price to pay to get that additional comfort. So we start today's webinar with Satish Vaidyanathan. At the outset, thank you so much, Satish, for being here today. Satish has, of course, been a very enthusiastic and a very consistent participant in a lot of our programs. He's a chartered accountant, qualified in 2005, and he's also got an executive diploma in financial management. He's basically from Chennai and completed his graduation at the Vivekananda College. After completing his articleship, he worked abroad, and then he currently is a partner with BSR & Co. as part of their audit and assurance practice. He specializes in audits across the spectrum, whether it's IFRS, Ind AS, US GAAP, Indian GAAP, with experience spanning large and listed multinational entities. And within his firm, and as a passion, Satish focuses on the firm's technology and digital initiatives in audit and quality agenda by contributing to their internal audit quality review programs. And as I mentioned, he's a regular speaker in ICAI forums and client knowledge sharing forums. And he, like most of us, enjoys cricket. I think he enjoys playing cricket, badminton, and reading. So it's over to Satish Vaidyanathan for his presentation on auditor's responsibility on pending litigations.
Thank you. Thanks, Shripriya, and thanks, Durgesh-ji. I hope I'm clear, audible.
And Satish, we have about 800 participants on this webinar as we speak, and it's not a structured CPE credit. So for an unstructured program, we have many participants.
And a very warm good evening to everyone who's on the call today. It's first of all, thanks for inviting me for this webinar, and it's a very interesting topic. And while I've presented quite a few times in ICA forums, not necessarily on litigations, nor have I seen corporate litigations as a topic being discussed very frequently. It's been more of auditing standards as well as on accounting standards, but not as a corporate litigation as a topic. And very rightfully said, it is a very important topic, be it from the corporate side or being it as an auditor. I'll probably spend 20-25 minutes taking through a quick few slides which I have prepared for this. And there are some case studies also which are very basic, but obviously it's possible that it will make you think along the lines, how do you look at litigations in that way? And obviously there is an inclination towards the accounting standard which you need to follow when you're looking at litigations. And what are all the broad steps you look at when you're evaluating the litigation, especially from an auditor's perspective. So I'll just put up my slide. Yeah. I'm presuming the slide is visible. I'll go ahead from here, and I think the first slide is just the context. Yeah. So probably the four, breakup of the slides which I have is first to very basically understand what are litigations, right? And what are litigations and claims. There's a very basic definition of that. While I'm presuming most of you know that, we'll just rekindle our basic knowledge. We'll also look at responsibilities and actions. Being an auditor, obviously, as Shri Priya Madam mentioned, the first responsibility is for the board or the management to provide the information. But that doesn't remove the responsibility of the auditor to hear and see things outside of what the management tells you to. So that we'll spend a little bit of time. The third one is obviously to understand what are provision and contingent liabilities. This is, while it's definition based, but there is a decision making which as an auditor, as a management, you will have to do when you're applying the standard and evaluating a particular litigation or a claim. So we'll go through the basic principles from a provision and contingencies. And fourth is a few example case studies which we will go through to help us understand how does the evaluation of a litigation go about. And all things said, the basic step is obviously to identify litigation. If that is not done appropriately and completely, then we are obviously on the wrong foot. So that's something which obviously remains as the basic set of procedure which a management will have to do. So let's delve into the definition, right? What is exactly a litigation or a claim? Is it a possible asset that arises from the past events and whose existence will be confirmed by an occurrence or a non-occurrence? Not necessarily, right? We're talking about litigation and claim. Is it a possible asset? No. A program that is planned and controlled by the management and material changes either the scope or business understanding? No. Is it a liability of uncertain timing or amount? Possible. Actual or pending actions brought to court to enforce a right or a demand compensation? So there are all these four. And as we look at it, the litigation or claims are actual or pending actions, demands, fines, or proceedings involving the entity related to the alleged wrongful conduct brought by an individual, an entity, or regulatory or a government body. So what we need to remember is some of these can be legal actions, some of these can be just claim. So we need to evaluate both from a corporate perspective. Anything that has a actual or a potential action brought to court, or even otherwise as a claim raised by an individual, by the entity, or on the entity by a regulatory or a government body. So that's the basic definition, right? So there's a whole lot of things which can get covered if we think of the definition alone. From there, let's very briefly understand what are the responsibilities and actions by the respective two people who are involved in a client scenario. So one obviously is the board and audit committee. I'll briefly run through, while I do know Shreyas will talk in length with this, but just a brief thing. When we as auditors go to the the corporate environment or client environment and ask them what do they look at. So one of the things which the audit committee and the management do is to first have a process set in place whereby they review litigations and claims, and that should be in completeness. As I mentioned, the first step has to be that the review of the litigations is complete. If that is not there, then obviously there are things which are totally uncertain. We don't even know what is hitting the organization. The first set is obviously regularly reviewing the litigations and claims. The second most important part, and today, as years have passed, over the years from my own experience, the sources of information is just immense. And as the digital capability available today, and Shri Priya Madam also mentioned there is a demonstration which will happen, and I've had a brief look at the demo, the tool which she was mentioning. It is quite informative, and as you'll see the demonstration, you'll understand the amount of information you can actually get when you're looking at both from a corporate side or as an auditor. The source of information requires obviously internal and external. Obviously, there is information which flows from legal counsel. There are something called market rumors, and you would have seen the recent circular for proposed amendments from SEBI, which also mandates certain set of companies to look at market rumors and give a justification as to what those are. So that could also form certain litigations or can be items which can throw up litigations in the future. So those are very important. The word business acumen is of paramount importance to both the company as well as the auditor. And why? As an organization, the management needs to know, considering their business, what could be a potential litigation too. A simple example is any of the auto companies today calling back any of their cars for any faulty, equipment or faulty device, a small component in the car. So that actually leads to a potential litigation too. So we just need to be aware what is our sources of information. Whatever I've listed here is just a gist of it. There are plenty of sources of information. When I say the number of sources of information is higher, with that comes the difficulty is to how do you find a reliable source of information? That's the challenge part. The third thing which the board or audit committee do, obviously they need to consult. There are certain litigations, depending on what the complexity is and what area of expertise is required. There is a requirement for the organization to look at external counsels who are representing them, who are independent of the case, to opine and give them perspectives of what is the criticality of the entire litigation. The fourth element is obviously the board and audit committee needs to review what management's decisions are. What are the information they have taken input? What are they assessed? And what is the output from there? And when the board looks at it, the key parameter for that is independent perspective. They need to bring in their unique set of expertise. If there are independent directors of the board, they need to bring in their expertise and experience to challenge the management before a decision is made as to how the litigation is being treated in the financial statements. Now, having talked about all these things, the most important factor is passing on the information to the auditor at the right time. From an auditor standpoint, while the company is responsible to provide the information, the auditor needs to have a better understanding of the entity. And the business acumen is paramount importance for the auditor to ensure he's looking at the right areas, right sector, right geography, to ensure he is able to identify risks with respect to any litigation which have arisen or going to arise. Now, when we talk about pending litigations, we need to identify the sources of information which those charged with governance have looked at. They need to do an appropriate inquiry with the audit committee and board to ensure all information is available to them. They have to do their independent confirmation with the legal counsels and obtain those confirmations in return. So there are reporting implications if they are not able to get that. And obviously, one of the key things which the auditor have to do is to look at minutes, documents, listings from counsel. For instance, if the tool which is going to be demonstrated today, that is a source, then the auditor must look at those and see, are there items which the management has not identified, and are they able to look at those and probe the right questions to the management. The auditors also need to use expert and specialist when the capability within the audit team is probably not the same, considering the area of litigation or the expertise which is required to address those litigations. For instance, if it's a tax litigation which is pending, then you may need a tax specialist to help out. Now, at the end, you do evaluate the management assessment, removing all bias from there. And in the management assessment, the key element is to look at what are the internal source of information and what are the external source of information. And depending on that, trying to correct or trying to assess the completeness and reliability of this information is very important. The last point with an auditor is obviously looking at the reporting responsibilities. If every information is available, you take the right look at it. And then if there are any reporting implications, then you communicate with those charged with governance and take the appropriate implications to the auditor. So those were a brief of what responsibilities and actions of an auditor are. And these are at a very high level. And as you would know, there is enough guidance as to know each and every procedure what the auditor needs to do. We will dwell upon that as we look at the case studies in a few minutes. As I was running through, what are the steps which an auditor needs to do, and obviously there are challenges and pitfalls. The first part of the challenge or pitfall, handling pending litigations is the completeness and reliability. As an auditor, how are you sure that the information which you obtained is complete and reliable? So here, again, it goes back to the point that the management obviously need to provide the information. The auditor needs to make the necessary inquiries with the right amount of people. If the organization has an internal legal counsel, then they need to definitely have a confirmation from him to say these are the complete list of legal cases or litigations which are pending with the company. At the end of it, you do test reliability. What is the source of assessment which they have done? What all has gone into the estimate of treating that particular litigation? In case there is a provision which is required, then what are the inputs which has gone into the information for the assessment? The second part is timeliness. The information which is coming to the auditor and what he is seeking should be timely. When there is a litigation outstanding, as it's say 31st of March, how and when do you get a confirmation from the external legal counsel? Let's presume it's a private limited entity and it is going to get signed somewhere in August or September. As an audit process, you have sent out the confirmation in, let's say, in April, and you have received a confirmation by, say, May. But by the time when you're signing the audit report, let's say in August or September, there are enough time which is passed off. So, which means as an auditor, you have a responsibility to update your audit evidence to see have there been anything which has happened post April till the date of signing. So in handling pending litigations, it is also important to ensure the updates from the management as well as, if required, from the external counsel is closer to the date of sign-off, which will then allow you to make a more timely and efficient or effective decision process. The third one is the independence. Wherever is the opinion on the litigation is coming from, the external party has to be independent of the organization. It is very simple evaluation. Today, when you're using an external expert or a specialist, you need to evaluate the independence of that person. And it's in audit terms, it's a simple logic on using the work of others. And you will have to evaluate it and put it in the documentation of the audit. The use of significant judgments and estimates, again, it all comes down to experience and how do you analyze these judgments and estimates with relevant supporting data. In a simple logic, any pending litigation will have supportings from the external legal counsel with other legal cases, which supports the view of the company. So accordingly, you will have to evaluate from an estimate standpoint. If there is a present value of the outflow which is being determined for a particular litigation, you will need to look at those estimates on what basis the estimates have been done. Is it at 100% or is it at 50% of the outflow which is estimated, and accordingly test those data in detail. As an auditor, one of the most important factor with the knowledge of the entity, understanding of the entity, you need to have the foresight and source of information what can probably impact the organization when you do your risk assessment processes. These are probably the challenges which an auditor faces, and you need to structure your procedures to address some of these in a timely manner with your risk assessment process. Now, dwelling a little bit into the accounting standard. So there is a set of pending litigations which has been identified by the organization. There are procedures which you do first to ensure these are the set of litigations which is to be assessed by the management. And once the management assesses, they are going to break it down into either a provision or a contingent liability. The definition is quite simple, right? So a provision is recognized as liability because there is present obligation. So when you pick up a litigation, there are three clear assessments which you will need to do. Is there a present obligation basis your assessment? Moment there is a present obligation, you will need to make a provision, which means that has to be evaluated as to how much will be the outflow. Again, there has to be a reliable estimate. So these three parts will make the present obligation to lead into a provision and to be made in the books of accounts. That is the first step. Now, while it is all theory, we will go through some examples which will help you understand how do you go through the decision tree once you have a pending litigation in your hand. The second element is when there is no present obligation, but there is a possible obligation. Now, how do you decide between present and possible? Again, it goes down to evaluating what is the more likely than not situation. When I say more likely than not, there is a present obligation, then obviously it leads to a provision item. When you say possible obligations, when it's not a present obligation, it moves into the bucket of a possible obligation because it is still litigative and it stays as a pending litigation. Now, a possible obligation is basically whether it is confirmed as an obligation that could lead to an outflow or not. Now, these are not necessarily recognized as a liability, but it is taken into a contingent liability. Or there is a situation where it is remote or not probable. That is the third level where you decide there is a litigation. However, there is a possible obligation, but it does not necessarily seem to be in the unfavorable situation of the company. And hence you deem it as remote. Now, these are the three concepts which you need to remember whenever you are evaluating a particular litigation. Now, this assessment is basically same for be it the organization or the auditor. The organization needs to go through these steps, and then the auditor needs to evaluate those with an independent view. Now, we'll look at quick few scenarios, to evaluate, think each of these as of your client, right? And then evaluate whether these litigation or not. So the first one is where your organization is a toy manufacturer and a group of customers have filed a claim against toy manufacturer for faulty products. Quite straightforward, it is a litigation. So obviously this could apply to your engagement. Yes. The second situation, a patient files a malpractice lawsuit against a hospital. In this scenario, let's presume the hospital is your audit client. Then obviously it does affect your hospital. Then there is a litigation or claim. So hence you do evaluate it and put it through the decision tree model, which we will see in the next section. The third one, the audit client which you're looking at is an entity's is an oil refinery and causes contamination and operates in a country where there is strict environmental legislation. Does this pose as a litigation or a claim? It does, because you're basically violating local environmental legislation, and there's a possibility that this could create a liability in the future. And the violation of, as I mentioned, the litigation could be from regulatory and the government too. So you need to be aware of these situations too and look at it from a litigation or possible litigation scenario. The fourth situation we are looking at is customer seeks damages because they became severely sick after a private party at a large restaurant chain. Again, you look at it depending on what your client does. If your audit client is a restaurant chain, then you evaluate that as a litigation. But let's presume you are only providing the food items for the restaurant chain's kitchen, then not necessarily a litigation or a claim. So it's again dependent of your understanding of the entity and how it is, what kind of business they are into and what is the exposure depending on what the litigation is. The fifth situation is quite common in most companies where a former employee sues for a wrongful dismissal. Is this a litigation or a claim? Definitely yes. So that's quite straightforward. And the competitor infringes on the entity's patent. This is quite common. I mean, most of you would use probably an Apple or a Samsung phone today. The competitor infringes are quite common, and there are multiple litigations which run on those. Are these litigations to be taken lightly? Not necessarily. These could have very big damaging impact on the organization as well as auditors need to evaluate where the pros and cons of the litigation is and go through the decision-making process. In simple terms, some of these are classified as a litigation, and the fourth one, considering you're not the auditor of a restaurant chain, probably is not a litigation. Now, under Ind AS, there is a decision tree which goes through, right? It's just a pictorial representation of what you effectively do, especially when you evaluate a litigation. So how do you go about, looking at a litigation is what you are effectively looking at on this particular slide. Basically, once you have identified a litigation, you start with assessing whether there is a present obligation as the result of an obligating event. Always remember, let's presume the organization's year end is 31st March. You need to be aware for it to be evaluated. The litigation should have already happened, or the situation should have already happened by 31st of March. So hence you have a situation today or an event today which has occurred or occurred in the past. You evaluate whether there is a present obligation as a result of that event or not. Now, if there is a present obligation, then you go through the channel downwards, which is basically yes over here. Moment you decide there is a present obligation, you will have to evaluate what is the probable outflow, right? Let's probably take a simple litigation of a patent infringement. And as an organization, they would definitely know whether they have infringed or what is the pros and cons of a particular patent. If it is already a registered patent and there is similarities, your legal counsel should evaluate it with adequate expertise and let you know what is the probable outflow in such situation. If there is a probable outflow, then you go through the bottom where it says yes. If there is no probable outflow, then you move it into remote, right? So again, the remote decision making will come to the next step. Now let us continue with the probable outflow being yes. Then you look at a reliable estimate. If there is a probable outflow, and you have to necessarily make an estimate of what could be the outflow. Now, in rare situations, the decision could be very difficult to determine as to how much is the reliable estimate. So in such scenario, you basically evaluate whether you need to disclose it as a contingent liability. But however, in such situation, you will also have to define why it is rare to disclose a contingent liability, or provide for that amount, because you're not able to reliably estimate the particular outflow of the litigation. If everything is determined, if there is a present obligation, there is a probable outflow, there is a reliable estimate, you make a provision in the books. And there is a publication in the ICAI website which talks about, which is basically an education material on Ind AS 37, which will tell you how do you go about determining the provision number. We are not going to get into that, but this is basically to decide how do you get there. Now, the second possible outflow is basically where you decide there is no present obligation as the result of an obligating event. So there is no present obligation, but however you determine, because you are contending or you're filed an appeal against a particular litigation, you believe it can come through in the future. Today's date, there is no present obligation. So you basically move it to the next bucket, which is possible obligation. Now, once it's a possible obligation, you again determine whether it is yes or a no. If it is yes, if it is remote, then again move it to the right side and say do nothing. You don't even disclose. To get to a remote situation, you will have to basically understand that there is no way that this litigation could go in an unfavorable situation against the company. Now, when it is remote or when it's not remote, then obviously today's date, you don't have enough facts to say there will be an outflow or there is a probable outflow, and hence you go and disclose it as a contingent liability. Now, that's a lot of theory. I'm going to take a pause here, and while I'm going into the case studies, I'll give you a few seconds to just digest the decision tree, because you will keep seeing this diagram in the next slides also to help you make the decision. Okay. Now let's look at case study 1. Now the case study 1, I'll give you a minute to read it. I'll also quickly summarize. A company A was sued for wrongful dismissal by a former employee. This is on 13th of March. And the case is ongoing as of 31st of March, which is not much of a time delay. Even if the case was filed on, say, 15th of February, it would have still been shorter. The management and their lawyers anticipate that it is more likely than not that they will be found liable to the former employee. So, which means they believe there is a higher threshold of possibility that this will end up in a litigation and there may be an outflow. And basis this, they believe the outflow could be 15,000, right? And the materiality of for the audit purposes is around 50,000. Now let's take a step and look at the decision tree. Now the way we evaluate it, is there a present obligation as a result of obligating event? Remember, as of 31st March, the event has occurred, but the case is still ongoing. So it is not determined that the case is lost already, but the case is ongoing. However, from a lawyer standpoint, and as well as the management, they have determined that there is a possibility, or there is a more likely than not situation where they will be found liable to the former employee to the extent of 15,000. So is there a probable outflow? Yes. The third one is a reliable estimate. In this scenario, they have made an estimate of 15,000. So in many situations in your legal, in-house legal, giving you a full list of litigations, you will find that there are situations in which they have identified a litigation. The amount of litigation is so much. The lawyer confirms, or you will need to obtain a confirmation as to where is the situation of this particular litigation. Is it more likely than not that it will be unfavorable to the company? Then you look at the value which you need to provide for. And in this situation, you effectively look at the left side of the decision tree, and everything gets answered as yes, and you keep moving in that decision process. So that's the way you end up and providing in this case study. Now let's look at another case study, and this is the last case study I have, and it'll slightly longer. We'll just give it a minute for you all to read. A customer shopping at company C claims that a company employee pushed her to the ground while the store manager was not looking. So it's a very simple case. I'm sure most of you have gone to these supermarkets. Think of any hypermarket or a supermarket which has multiple products in place, and there are customers who walk in and go out, and there are store managers who help out the respective customers. Now, when you look at it, what the customer has claimed is the store manager basically was not looking at it, but an employee who was helping the customers had pushed her down and the ankle was hurt. The security camera is broken, and hence it's only the customer's word against the company CEO or the employee. But from whatever you have looked at, you understand the company's employee is an exceptional employee with high performance ratings and superior customer services. And that is verifiable from whatever past records you have, feedbacks you have, and has never had an instance of harming others. When the store manager asked others, including the store supervisor present, they indicated the employee did not push the customer, right? So the basis of management assessment and the legal counsel also doing his due diligence has advised the company C is not liable for the customer's injury, and the success rate of the customer's claim in the court is 20%. The reason for 20% could be varied reasons, because one, there is no real evidence, but again, the customer is hurt in her ankle, because that is a tangible evidence which you'll have from a customer standpoint. However, whatever inquiry process, etc., which is done, seems to indicate otherwise, and hence the legal counsel, as basis whatever facts of the case, as determined as saying 20% probably in the claim in the court. Now, when we put this on the decision-making process, is there a present obligation as the result of an obligating event? Is there a present obligation? No, because basis the legal counsel's advice, there is no present obligation. It is obviously being contended in the court of law, and hence you basically move into possible obligation, because the way the counsel's view is given is in the form of saying the success rate of the customer's claim in the court is 20%. So there is a possible obligation. Now, when you look at it on the, so let's take the first step. So the answer is no there. Now, the next step, you basically evaluate, is there a possible obligation? There is a possible obligation, but that is somewhere in the range of 20%. Right? Now, depending on how much is the claim and materiality, you will also have to evaluate how is it remote? Not necessarily. There is still a 20% chance that it is a claim which is possible to be settled to the customer. So there is a possibility of there is no remote chance. It's basically there is a possibility of settling something to the customer, and hence you do not say it is remote. It's actually not remote, and hence you go into the bucket of disclosing contingent liability. Now, while I'm talking this through the decision making, now let's understand the rationale. The first step is basically a yes or no question. There is no present obligation basis the legal counsel. The second set is an yes, because the legal counsel estimates a 20% chance. The third set is because the claim's chance of success means there is a possible obligation requiring disclosure. So all these which you see on the decision-making process is all directly from the standard, and it just helps you to move from one bucket to the other in order to be able to make a decision process. Now, is there a threshold which is mentioned as to how do you make it more likely than not? Not in the standard. The standard doesn't mention a specific threshold, but it does come out from the lawyer's perspective as to how you see the case going, right? So you do need to evaluate it from the facts of the case. In summary, I'll probably run through this quickly, the last 4 or 5 minutes which I have. From a pending litigation perspective, what someone needs to be aware of is the first step, obviously as an auditor, needs to be consulting when there is complexity. So we also need to ensure the management is consulting. There are situations where the management may rely on the in-house counsel's view because the severity of the litigation is not very great or very material from a management standpoint. But as an auditor, you need to evaluate the situation and push the management or request the management to make appropriate decisions. The second one is the impact analysis, and the materiality goes down through the standard to evaluate what is the impact, what is the amount need to be provided, or what is to be disclosed as contingent liability. The key element from an auditor standpoint, as well as from an organization perspective, is the business acumen. You need to be aware as to, from an organization standpoint, where are your risks? When you look at a pending litigation, even let's presume there is one single customer who was raised in a litigation. The company also needs to evaluate, could this be or could this change into a class action suit in the future? So a pending litigation is not a narrow assessment. You also need to look at the pros and cons as to how the litigation is going and what is the view of the legal counsel, and accordingly take a call on how do you look at it from an audit implication. The fourth element is you either provide or disclose or don't do anything about it. But for that to take effect, you need to go through the decision-making process and the decision tree according to the standard. Now, that's the summary of it. In simple terms, pending litigations are a complex scenario. It does need a lot of inputs and it means a lot of judgment and estimates. It will need the specialist involvement at the right time, and completeness of information is of paramount importance, as well as the reliability of information. So from an audit standpoint, these are probably the key elements which you need to keep in mind, and more likely than not, the decision tree will help you to get to a right conclusion from an assessment of the pending litigation. So I'll take a pause here. I'm not sure if the question answer tool is being enabled, but I'll take a pause here, and if there are any questions, I'm happy to answer. Otherwise, I'll happily hand over. Yeah.
Thank you so much, Satish, for this really nice exposition. And I think what I really liked was that particular slide where you had two notepads. Do I take it or you don't take it? And I think that was nice. And I also like the Ind AS 37. Although it's the Ind AS, I think it's a very logical decision tree that helps one to identify which way to go. So in fact, I just wanted to add another insight to this. Many of them attending this webinar would also be auditing SMEs, small and medium companies. One of the bigger challenge, one large challenge I faced is some very obvious litigations not getting reported. So for example, there's an NPA status. You know that there is a default with the bank. Now the bank has already gone to DRT, but that litigation does not get disclosed. So while Satish did speak significantly about customer claims and things like that, there are also some obvious omissions that we are finding, which is a bit scary. So, and in that sense, I think your management representations, etc., have to be really, really tight in the context of pending litigations, matters sitting in arbitration. In fact, very interestingly, somebody, a government official was mentioning to me that, he came across a balance sheet where an amount which was an arbitration claim issue had gotten included in the revenue, thereby making them tender qualified. So sometimes, the clients tell us half of it and then we end up including, but then it was discovered at that stage and that party had to be disqualified. So I'm sure all of this will sort of bake in together. So once again, thank you very, very much. And just in terms of a quick report, I'm given to understand we have 1,250 attendees in this webinar. So thank you so much. And I'm sure I'll get a lot of feedback and I'll pass it on to you. So coming over to the next speaker of the day, Shreyas, and I'm sorry we kind of overextended our time. So on this a little bit, partly my error, I think I spoke a little longer than I was expected to. So in terms of Shreyas, I'd like to first start with a very personal introduction and then move on to his profile. He made a very strong request to keep it very brief, but I'm going to take the liberty of taking just 2 minutes extra to describe him better. The first time I met Shreyas was at a conference in Bangalore. It was a conference that was organized by the IBBI, if I'm not mistaken, or something to do with the IBC. So I had just spoken to him for about 10 minutes before the conference. And as the schedule stood, we were a little delayed that day. So I had a half an hour slot or a 45-minute slot, and then Shreyas was to speak after me. But then that meant, he would have to speak only for 10 minutes. But then I just heard him for 10 minutes and, looked him up on LinkedIn. And then I came back and said, okay, I'm here all the time. I'm from ICI. And I'm going to speak only for 5 minutes and you please speak for 45 minutes. And I'm sure the largest gainer there was A, the audience, and B, more importantly, me. So request you to put your virtual hands together for Shreyas. Shreyas Jaisimha studied law at the National Law School of India University and was a Chevening Scholar at the University of Warwick. He has over 20 years of experience in litigation, domestic, international dispute resolution, and he's advised a variety of clients spanning various domains. He's also, as an arbitrator, served as an arbitrator in India and internationally. And in addition to acting as the co-counsel for the Republic of India, ladies and gentlemen, the Republic of India, in 2 significant investment treaty arbitrations, Shreyas has been engaged to act as a counsel in significant domestic and international commercial arbitrations, and as well as in court proceedings arising out of such arbitrations. He's a member of the Executive Committee of the Foundation for International Arbitration Advocacy, Geneva, since 2012. the National Coordinator for the UNCITRAL, National Coordination Committee of India. And all of us know that the UNCITRAL is the United Nations body on commercial and trade disputes. And he's also a member of the Mumbai Center for International Arbitration. He's obviously very, very well read and does a great job wherever I've seen him getting engaged. So it's over to Shreyas. And if I've missed out something, you may please feel free to add, Shreyas. And he will talk to us on a broader perspective on understanding litigations, the sequence, the flow, etc. Thank you. And it's over to Shreyas.
Thank you very much, Shripriya, for embarrassing me. And also, I remember very well the first time we met. I do not have a slide presentation, so if you'd like, my other panelists can please feel free and welcome to join with the cameras so that there's no visual monotony. The approach that I have chosen for today is to perhaps start at the other end of the spectrum where we were introduced at the very beginning on the cases that were mentioned, included Cafe Coffee Day, the HFL, the audit quality maturity model, and matters of some seriousness which may impact not just the advisors such as auditors, may even impact the judgment calls that have been taken by other professionals, and most certainly would have an impact on the board itself. Now, the advantage of dealing with these flashing red light issues is that it induces that cold sweat and chill and straightens up the spine. And 1 hour into the presentation, excellently made by Mr. Satish Vaidyanathan, hopefully I've had to now regain the attention and focus of the audience. And this approach, I would perhaps begin with one of those words which you rather not hear, but as they say, no good cause can be pursued without perhaps blurring some lines along the way, just because of human effort. And that word is fraud. It's not a word that we would want to encounter on the wrong side of. But in the Companies Act context, of course, most simply, even before getting into the Companies Act, fraud is suppression of truth or the suggestion of falsehood. Suppress your very, suggest your false. And I'm sure in time, we now will have several Sanskrit and other mottos to also go by. But under the Companies Act, I draw your attention to section 447. And again, it speaks of fraud in relation to the affairs of a company or a body corporate, includes any act, omission, concealment of any fact, or abuse of position committed by any person or any other person with the connivance in any manner with an intent to deceive, to gain undue advantage from, or to injure the interests of the company or its shareholders or its creditors or any other person, whether or not there is any wrongful gain or wrongful loss. The deliberate pause is to allow it to sink in. The extent of its application is very broad. Because it is included in the Act of 2013, there is not much judicial guidance in precise terms, although it is reflected upon. But the key elements emerge as follows: that it is a matter pertaining to the affairs of the company, not an external matter. That it be an act or an omission or a concealment of fact or an abuse of position And this is inclusive. So it can be 1, 2, 3, 4, or all, any combination thereof. And the third element is that there must be an intent to deceive or gain undue advantage or injure the interests of the company, shareholders, creditors, or any other person. So I draw us back to who are the stakeholders of this enterprise. Far beyond the shareholders, far beyond the employees, the directors, the advisors to the company. And it is as broad as any other person being impacted. And so, although you've had a few cases, one which talks about the if any person abuses the position with an intent to deceive, this is Dorasamy versus State, or there is Gaurav Kumar versus SFIO, Delhi High Court, where they've said that the definition of fraud is extremely broad, and any person making a statement which is false in any material particulars, knowing it to be false, or which omits any material fact, knowing it to be material, would all fall within the ambit of 447, 448 of the Companies Act. And so this draws the link between fraud and material omissions and draws the bridge between Mr. Vaidyanathan's presentation and mine, to say the impact of what was being talked about, of whether it is disclosures, whether there is any other suggestion of the state of the enterprise, if it is anything less than accurate, and if there are elements that the other elements that we talked about, even for example, if there is no wrongful gain at all to anybody, even then you may have, but if the other elements are met, then the definition of fraud might apply. Further, there's the case of Vikas Agarwal versus SFIO, also the Delhi High Court, where again they have talked about the first instance application to the companies itself, and also to other persons who in any manner connived in the commission of the offense to gain an undue advantage. So as Sri Priya's initial comments also underscored, the primary obligation, of course, remains with the management, with the board, undoubtedly. But the brush doesn't stop there. The brush is broader than that. And that is where all persons advising the enterprise ought to be cautious. There are specialist regimes that you're aware of. For example, SEBI LODR, which notes that reviewing the findings of any internal investigations by the internal auditors into matters where there is suspected fraud or irregularity or a failure of internal controls of a material nature, and reporting the matter to the board. And further, you have instances where there are companies' auditor reports orders, be it of 2016 or 2020, all of them giving us further guidance on what self-reporting obligations in relation to fraud are under both the Companies Act and the SEBI LODR. So the self-reporting obligations would, in case of auditors, require disclosure. Disclosures required, let us say, pursuant to a management's representation that has been made, management representation letter, which could be part of the audit exercise. It could also be pursuant to the director's responsibility statement, and may also concern some disclosures that they have found in the course of their professional review, the materials that are presented. The management representation letters, of course, are an important backstop insofar as auditors are concerned. But again, it's not auditors, as the first speaker of today cautioned. This is meant for the, he used the word serious. I would perhaps add the words brave as well. And it is because it is exposing oneself to a very severe set of consequences for lapse in performance of duties. And so, as they say, one should not be on the wrong side of the aphorism, fools rush in where angels fear to tread. And so one has to be, the first caution is to ask oneself very, very searingly, whether as an enterprise or an individual or a collective, whether this is really the task that one wishes to perform. Now, if so, then it is done with open eyes and consequences, both good in terms of commercial recognition, and reputation, and all the positives that are associated to follow, and the cautions that the regimes that we are now speaking of will also follow. Typically, the management representation letters would have extensive disclosures required in relation to fraud. Now, whether it is actual by the company, suspected or alleged, and therefore, if a management reporting letter of a large enterprise claims that there is no activity of this sort going on, and it provides itself a self-certified bill of health, that itself ought to present a measure of caution to further perhaps seek buttressing of such a management reporting letter. There could be, separate from this, director responsibility statements that are also required to follow. And here, there may be incorrect statements made by them in the accounts, and all of that might be picked up. And also, there are other provisions, such as 143(12) of the Companies Act, where the statutory auditors, in the course of performance of their duties, for any reason, believe that an offense of fraud has been committed in or against the company or by its officers or employees, and there's a monetary threshold of 10 million, then they would have to be reporting fraud. And there is, of course, a guidance note issued by your institute, which I'm sure everybody is well aware of. The guidance note also requires the application of a very beautiful expression called professional skepticism as to whether the fraud was indeed identified, detected in full rigor, and perhaps whether through a whistleblower. But just like in a civil proceeding, and those of you who are lawyers listening in will be familiar with the rigor of the Civil Procedure Code, when there is an allegation of fraud that is made, that it must be specific, must contain the time in which it is made, the person who has made the incorrect representation, person who has received this information. And fraud, therefore, cannot be alleged lightly and loosely. In fact, there can be countermeasures in relation to defamation that might also follow. On that, taking a pause for a moment, looking at recent events, be it the Hindelburg report on Adani and the countermeasures that were threatened, or be it the more recent civil suit for about 100 crores that has been filed by one of the promoters of the funded startup in Singapore called Zilingo, fashion industry, against a person who was an investor but who felt in a public newspaper, made a comment that there is potential likelihood of impropriety in this company, being met with a countermeasure of this 100 crores of defamation. So again, these are not allegations that can be made without careful study and substance. At the same time, there's a bind that if the reporting is not made, then there may be other consequences that follow. In relation to this, in the banking industry, if some of you are familiar with, and Shripriya also mentioned the companies that are exposed to, let's say, the NPA or any other loan facility issues, then most recently we have seen the issue of accounts being nominated as fraudulent accounts, that is separate from willful defaulter regimes issued by the RBI, and the rigor with which the Supreme Court had to consider the issue. The question and the practice that had occurred till then was that banks, perhaps driven by the sense of caution, if there is an element of fraud, had without notice, sometimes without informing the ultimate account holder, may have escalated and nominated and termed the entire account as being fraudulent to the RBI, and consequences following. Sometimes CBI investigations, search sheets, criminal complaints, sequestering of their passports. All of these are realities that we are all living with. And where the court mentioned that the natural justice principles are being heard, especially before there is a serious violation being alleged, then now there is now a further request by counsel for the State Bank of India, no less, which tells you the seriousness with which the banking industry views this issue, seeking a clarification as to what extent those accused of fraud must be given particulars, even when the investigation is underway. So there is, ladies and gentlemen, a fine balance that we all are required to tread while concerning not just the decisions to declare as a provision or declare as a contingent liability. There is one set of dilemmas that Mr. Vaidyanathan pointed out, and I'm presenting to you another, which is the various instances where on the one hand, there is a very broad set of obligations to disclose, report elements of fraud, and the stakeholders seem to be well beyond the immediate shareholders or employees or directors, advisors of the company. And on the other, you have the countermeasures that are possible against persons who have over enthusiastically tried to report impropriety. We have seen another example of this in the NCLT and the IBC regime. For example, I'm sure many of you are RPs, resolution professionals, interim resolution professionals, are fully aware of the instances where the NCLT has had to consider applications that have been made before under the IBC, where there are elements of fraudulent conduct alleged against former directors. And again, the countermeasures that are being seen, very ad hominem attacks, very personalized countermeasures against those individuals who are merely trying to discharge their statutory liabilities and their statutory obligations to the best of their abilities. So in either of these examples that Mr. Vaidyanathan and I have presented to you today, the considerations that not just the auditors have to keep in mind, but I would say the board itself have to be acutely aware that these are not positions that can be accepted lightly. Many persons, before the clarification arose on the duties of independent directors, seem to flaunt the number of companies that they wish to be independent directors of, or the continued number of years and decades that they continued in the same enterprises, thereby calling into question how independent are they in the first place. But now there is a sense of caution, and that should not have a chilling effect on business. At the end of the day, they say that hard cases make bad law. And therefore, the extreme cases which require a heavy-handed consequence, perhaps conducted by judiciary after investigation, perhaps should step at that level, that is, in the facts of that case. Now, to extrapolate from extreme situations and then to have a norm which is overbroad might produce chilling effects as well, which are not conducive to a business environment. So let me come to a close to say there are two fundamental duties that ought to guide us through this thicket and even the multiple decision trees that we come up. One is, of course, the duty of care. That duty of care is a specialized duty. Depending on your professional qualification, you may have a higher duty than a casual observer of the company's affairs or a journalist or anyone else. And given your statutory duty that you're discharging, duty of care that is expected, for example, of auditors would be of a higher order. Similarly, of directors. Directors' duties also would have to be kept in mind cautiously when it comes to the types of corporate litigations that they encounter. The second, at least insofar as it impacts this frenetic M&A or takeover activity that can happen once in a while, and I speak to you from Bangalore, which is a very active private equity VC ecosystem, is sometimes calling into question whether there are duties of loyalty as well. You see multiple instances of persons wishing to be directors in perhaps competing enterprises within the same industry, and creating for themselves a situation of making hard choices as to how much to disclose in which capacity into which enterprise. And so, falling back upon this rule of thumb of what was disclosed, suggested by Mr. Vedanath as business acumen, also known as business judgment, these are important principles. Business judgment rule is to remind all actors, especially courts, that they ought to stop their scrutiny into the work of corporate fiduciaries, especially where there is an exercise of business judgment or business acumen, and not to replace their generic view with that of a specialized view that a business has taken in its specialized circumstances. I suppose any talk that I give is going to be incomplete without a reference to arbitration. The number of times it came in my introduction at the outset. At the end of the day, arbitration is like plumbing. It's like it matters what you pour into the pipe, not that. So I describe myself more as a plumber because it's a question of understanding the process. But there is one thing I'd like to say about dispute resolution or dispute avoidance, and that is a sense of maturity in determining what is appropriate. Not every situation requires a heavy-handed approach to bring the most extreme remedy. And there must be a maturity amongst people in the business, amongst the advisors, amongst the legal fraternity as well, and having a measure of not killing the enterprise as a whole because of infractions that are, of course, bound to occur in the course of doing business. And we have, therefore, the new formulation of ADR, not alternate dispute resolution, but appropriate dispute resolution. And therefore, this, I would say, ladies and gentlemen, is the right time to say that every company requires a dispute resolution policy where you anticipate the existence of a dispute. Like in the construction industry, you have multi-layered approaches to understand that you cannot build a building without a brick, you cannot build it without a dispute, a large road or large infrastructure project. Similarly, businesses must come to the mature understanding that you cannot run it without instances of fraud, without instances of commercial disputes. They will occur. It is part of human history. It is part of human nature. But there are mechanisms to deal with appropriately. And therefore, businesses and professionals, I would call, when it comes to managing corporate litigations, have to develop a dashboard that is relevant for their enterprise and document it in terms of both materiality thresholds as well as impact on reputation, so that they're able to arrive at an appropriate approach to their disputes, however big or small. Thank you, Sri Priya, for the opportunity. Namaste.
Thanks so much, Shreyas. And Sarika, do we have any questions on the chat?
Ma'am, there were 2 questions I have put in chat.
Okay, I think this is for Satish. Satish, please clarify whether contingent liabilities not provided in the books of accounts in respect of taxes and duties need to be mentioned in CARO clause 7B.
Yeah, so with respect to CARO, one needs to remember that it's a pure, fact disclosure. The assessment of contingent liabilities depending on what the litigation stage is. But in CARO, what you simplistically do is what is the demand amount and what is not deposited and where is the litigation pending. So whether you have disclosed in your contingent liability or provided in the books, the fact here is whether you have deposited that with the respective authority. So you will continue to disclose the amount depending on where you are fractured.
And it says, adding to the earlier query where a disclosure has been made and under NDAS 37 of a tax liability which is arisen out of an assessment, but which has been disputed by the company and not provided in the books of accounts, but disclosed as a contingent liability, does it need mention under CARO 7B?
Yes, it's the same thing. So if there is a demand order from the assessment and that has not been deposited with the authorities because it is gone for an appeal, and hence you will continue to disclose that in the CARO.
So thank you so much, Shreyas, and we look forward to your further participation on some panels, I guess. So, and this time, unfortunately, we did not enable the query platform. We'll do that next time. We'll try and get a online poll or something like that configured. So, yeah. So thank you very much, Shreyas, and we now move on to the next session, which is by Darshan. Darshan works with Probe 42. Probe 42 is a service provider who actually compiles public domain data and consolidates them and presents them in a more readable, usable, analyzable format. So I'm not going to take much time, but we've done a tie-up with Probe. And I'm very thankful to Mr. Prakash Sharma of the Committee for Members in Practice. We had a Probe display and then he was so taken up and we decided to do this for our members. So over to Darshan for Probe. And I will try and chip in where relevant only for to put in my experience as a practicing CA, where, what items to look for, etc. But you can walk us through Probe start to finish. Thank you, Darshan.
Thanks a lot.
And we have 1,400 on this webinar. So
that's great. Yeah. First of all, thanks for the opportunity. My name is Darshan. I've been part of a Probe sales team, and the Probe has been empaneled with the ICAI as part of the CMP member, and Sri Priya was very instrumental in getting this done. What I'll do is, quickly I'll just share my screen and showcase you our capabilities, what is available. Then probably I'll pick up one sample company, and on the product itself, I'll try to relate it what the other speakers have spoken about the legal information and how Probe 42 can help in identifying either the pending cases or on the ongoing cases. Can someone confirm me, is my screen visible?
It's visible, Darshan. Darshan, I only have a small request before you start. You please tell an ICAI member how he can sign up.
Okay, great.
Under the scheme.
Sure. See, we'll also put those link on the chat. If you go to the part of this cmpbenefits.icai.org, you can see access to Probe 42 platform and initiative of the committee members in practice. The minute
so can you just repeat that? Can you just repeat that?
Yeah. These cmpbenefits.org. So in the cmpbenefits.ica.org, you can see a Probe 42 platform. What I'll do is I'll just put this particular link in a chat. I don't know, like everyone can access the chat.
Sarika will get that done. You can put it in chat.
Okay. So I'm just going to give you, two links, so which the members can click on the link. They can see the minute you just click on it, this is the form which opens, wherein you can fill in your name, the email address, the ICA membership, and the mobile number. You get a exclusive access. Maybe it takes a few minutes, wherein you receive a link from help@probe42.in. You can sign up and start using it. So what are the benefits for the members? For the members, we are giving around 7 companies detailed information free. You can go through the 7 companies detailed information. Later on, if you think you need a more, then you can purchase the additional credits from the platform. There are no fixed cost or there are no subscription fees which is available. If you want one company, you can go ahead and purchase one company. Since the empanelment with the ICI members, we have close to 1,800 members who have, signed up, and around close to 100 plus members who have been continuously, purchasing and using our services. Right.
So once you finish this, you log into Probe.
Yeah.
You can, show us the tool also.
Sure. Maybe I'll just quickly touch upon like what are the, the kind of a benefit which are available for the ICA members and what is our data coverage. If you look into my screen, so what we do is, we provide primary information from the Ministry of Corporate Affairs. So we provide company financials. As this particular webinar is more of the litigation, so we also provide the legal cases. So we have a wide range of legal coverage. We cover High Court, Supreme Court, NCLT, CSAT, DAT, DRT to the district level tribunals as well. I'm just skipping these, it's not much relevant. Yeah. So these are the type of sources when it comes to the legal, High Court, Supreme Court, tribunals, as well as the district level tribunals. So we cover suit filed cases as well. So overall, like we have close to 743 different data sources. So what are the process enhancements for auditors with the Probe? Currently the tool has been used by the IBBI valuation purpose. We have also empaneled with the Bangalore Valuers Association. Some of the chartered accountants who dedicatedly do or work with the public sector banks, they take a ROC search report from us. The tool can be used for the transfer pricing, wherein you can identify the certain set of peers based on industry, based on revenue range, various kinds of filters can be done. From the monitoring and consulting, this is we recently started, some of the chartered accountants want to do a kind of a consulting to their end customer, wherein they want to do the supplier, vendor, or a customer due diligence, and very frequently they also want to monitor and give insights to their customer, saying that which account might go bad or which account they need to exit the exposure, or what are the credit lines or terms and condition should be. Then majorly from the debt syndication, like we have hundreds of DSAs or the chartered accountants who help in raising the money for a debt, be it from any of the banks. The tool has been extensively used. So we also found one unique use case from the business development point of view, wherein some of the chartered accountants are identifying the companies where the audit by rotation is due from the business development point of view. Yeah, so we have peer compare. Okay, what I'll do is I'll just quickly, move on to the product itself. So this is a product what you are seeing. This doesn't require any kind of hardware or a software setup. It works well in the Internet Explorer. Typically, you can log in from email ID or the mobile number. See, once you log in, you see various kinds of sections, dashboard, corporate details, and search. Whatever I'm just going to showcase you is completely free. We work on a freemium model, wherein if I say the corporate status is active, there are like almost all 18 lakh companies which are active. Recently, some of the chartered accountants and the company started reaching out to us in identifying the struck off companies under section 248. As we speak, I'm just delivering some of the projects to the public sector companies wherein they have sent us the list of their customers and suppliers. We are identifying, out of that 10-20,000 suppliers or a customers list, which are the companies are struck off. I think this is as part of the Companies Act. The companies have to disclose whether they have done any kind of a transactions within the struck off companies. So the tool can also be useful for that as well. And other various kinds of filters, can be done either based on the revenue. So one of the chartered accountant was asking from Delhi, saying that they wanted to identify the companies where the revenue is more than 1,000 crores, but the company should be a private company. So there are 2,118 companies, the revenue is more than 1,000 crores. Not necessarily the listed companies, should have the higher revenue. Other filters, it can be done, based on the industry or based on the segment. Say you're doing the transfer pricing and you want to identify the peer companies from various industry or segment, it can be used. From the debt syndication point of view, say you want to identify the customers who have taken a secured borrowing with, say, State Bank of India. You can use various kinds of these filters in order to identify the customers who are already having a lending relationship. The query can be done based on the approximate location as low as a PIN code, or you want to classify the companies based on, say you want only the private limited foreign companies. All these kinds of search filters can be applied. What I'll do is I'll take up one particular company which has, the many legal cases which I've identified, which will be helpful for this particular session. And if time permits, I would be happy to take up any other company of your choice. So say, for example, like you are typing Arch Pharma Labs Private Limited, automatically the drop down comes in and you can select the company. Once you select the company, you can see this information like about the corporate. So this gives you kind of a more of a brief, what is that particular company is into, what is the date of incorporation, write up, paid up capital, authorized capital. This is, more or less you can consider it as a whatever is there on the MCA master data. You can broadly say the first three tabs is like more of a MCA master data, but it will be like more intuitive. So I just click on the director name. So I'll also get to know which are all the other companies he's the director. And the open charges will give you how much money or loan the particular organization has been taken from one or the other financial institutions. Before I just go to the shareholding and other things, I want to touch upon more on the compliance. So when it comes to the compliance, the first thing what we provide is the statutory auditor has given any kind of an adverse comments. So if the statutory auditor has given any kind of an adverse comments, we extract that and we provide it so that you can go through what are the adverse comments which has been given. And when it comes to the GSTN, we provide how many active GSTNs are there and how many inactive GSTNs, whether the particular company is filing the GST returns regularly or not. Are there any kind of delays in the GST filing can also be identified. But the major thing is, if you look, so we provide the legal information from almost all the sources. So we categorize into cases filed against the company, cases filed by the corporate, and based on the severity, we also group the companies. Say you can say there are 23 insolvency cases which are filed against this particular corporate. We provide both pending cases as well as the satisfied cases. So you can see these are the cases, insolvency cases, which are pending. And these are the cases which are disposed. So in terms of the disposed cases, you also can click on the order document and you access to the copy of a judgment as well. What has been done in that particular case, all that information will be available. As I told, cases filed by this corporate against the corporate, both will be available. So we also recently we have added one more section called as a probable cases. How this will be helpful is there is no legal identifier available, so there is no SIN number. At times, we have to try and match the name. Though we use some kind of an algorithm to match, there are some chances that some cases would have been missed out. So we have introduced another section called as probable cases. So in this case, the company's actual name is Arch Pharma Labs Limited, but instead of ARCH, it has been mentioned as a AREH. So probably, we believe this will be a Arch Pharma Labs Limited. Hence, we are showing it under the probable cases. And similarly, most of our information is verified information. So there are certain information which we are not able to verify, due to the unavailability of the website or the data timing. So we provide that under the unverified court cases as well. Apart from that, we provide the credit rating. We cover the rating from all the rating agencies, ICRA, CRISIL, ICARE, Fitch, Onicra, and you can also download the rating rationale as well. Then suit filed cases, we cover all the four bureaus, CIBIL, Equifax, Highmark, and Experian. Now CDR and BFR doesn't exist, but still wherever there are cases, we also cover that. So one of the things which I want to highlight here is, say this particular company, Arch Pharma Labs, was previously known as Avnet Papers Private Limited in 1996. In 2003, they have changed their name to Cibra Pharmaceuticals Limited. So there is no relation on the name to Arch Pharma Labs. But if you're searching manually, you need to go through all the various sources. But how many times you have to search? Like you need to manually search, are there any cases with the Cibra Pharmaceutical Limited? What I'm trying to highlight here is if there are any cases which are linked to the old name, still our system will be able to capture the cases against the old name and put it into the current company. Right? Now coming back, the structure tab will give you the shareholding pattern, how much percentage is with the promoter, how much is with the public. So recently the regulator has told that whenever you are doing the business, like you have to identify who is the ultimate beneficiary of the company or an UBO. So we also have the capability of identifying who is the ultimate beneficiary of that particular company. So then we provide the shareholding of directors. And if that particular company has a holding company or a subsidiary company, and if anybody is holding more than 5% of a stake, we also started capturing that. So in this case, the JM Financial Asset Reconstruction is holding around close to 26% of in the share. The security allotment, this will also be very, very helpful. People who are doing a kind of valuations, you get to know how much money the particular company has raised, at what price. You can also see the valuation report also. So this is not a mandatory to be attached, but I have seen for most of the cases, even the valuation report, will also be attached in the security allotment when they have done. So you get to know which are all the holding companies, subsidiary companies, the group companies, the director network, all that can be seen. So under the highlights tab, certain information which we provide. One is what is the revenue and profitability. Apart from that, like is that particular company is having a forex income, whether they have declared for a CSR expenditure as part of a mandatory. In case if the company is profitable for certain years, there is a criteria. So we also display whether they have disclosed the CSR expenditure and the principal business activity as per Ministry of Corporate Affairs. The financial data, it's a very, very extensive financial data. So if you see this information, so we provide since 2014 onwards. So we follow a Schedule 3. This is a complete balance sheet and the profit and loss account. So wherever we are providing the data, we are also providing the reference document or a link. You can see at the speed it is opening 136 pages. And another beauty is, we provide cash flow statement and certain key ratios. We provide around 16 different ratios. Now, what other auditors love when I talk about the business development, like if I go to the bottom of a page, you can see this particular company is audited by Torrey Sandeep Associates. So now I click on the audit firm name, I get all the other companies which are audited by that respective chartered accountant. So I can also click on the name Atul Jain. So this will give me which are all the companies signed by Atul Jain, both at the firm level and at the individual signing level. You will be able to check that as well. Some of the chartered accountants, uses, how this can be used. If the auditor has changed in 2018, and if he continues to be an auditor, obviously, if that particular firm, the audit by rotation is due, then obviously by 2023, they have to change the auditor. Then the peer comparison, this will also be helpful for the valuation purpose. So what we have done is we have taken the 30 companies from the similar industry and similar revenue range, and we are providing the median values. You can see here, whatever you see in the orange is the median value, and whatever you see in the black is the target company's value. So if you want to see which are all the 30 companies we have taken for the computation, you can click on these 30 companies and you see which are all the companies we have taken for the computation. Charge details, this is what I meant on the ROC search report. Most of the private sector banks are using our services, but at the public sector level, still they want a chartered accountant to be signed on the ROC search report. So we have several chartered accountants who come here, download this report into Excel, and the same information will be printed on their letterhead, and they started, giving this as a kind of a service to the public sector banks. And there are instances wherein the chartered accountants were able to do or empanel with only 2-3 branches. Now they are going ahead and empaneling with the multiple other branches, because now there is no human intervention, nothing. Within a click of a button, they will be able to get the detailed report. Compliance, I have taken through you what are the compliance it covers. And in the reference documents, we provide information on all the documents. We classify to financial documents, charges documents, and incorporation documents, be it MOA, AOA, certificate of incorporation. All that can be downloaded, and the information is available since 2006 onwards. So there is no downtime. We also have a processes. I think most of you are knowing now. Currently, MCA has undergoing the V3 changes. There are a lot of changes. So our capability is like we do also have the separate night shift, which the people will be able to download. That's how we are able to cater to our customers. So in the banking space, we have close to 70% of a market share, and every day we process close to 3,000 new companies. I can say it as we have a big data factory which is based out of Salem, Hubli, and Mysore. These places we really have a data factory, and we give utmost importance to the quality. The quality is our priority. We have a separate the quality team as well. So whatever the information which you are seeing, this can be downloaded either into PDF or XLS as well. You can download this data into Excel later upon, you want to do any kind of a calculation or, anything, you go to the financial data, you can just build a macros to arrive any other information, if you want, can also be derived. So we provide both consolidated as well as the standalone financials. And in the same way, in the Excel also, you can see all the legal cases also. The legal history will provide you the complete case details, what is the court, litigation, all that. But only thing is you have to come to the platform to get the documents which are associated, be it any of the judgment copies or any other thing, like you can come to the platform and you can download it. I think we have already put the link on the chat. You can access it. The first 7 companies will be completely complimentary for the chartered accountants. Afterwards, there's no fixed subscription cost as such. So if you want 1 report, it will cost you 500 rupees inclusive of the GST. If you want 2 reports, 449. If you are purchasing 100 companies in a year, it will cost you 329 inclusive of the GST. The credits will be valid for a period of 1 year, and any credit which you have used, say today you have, unlocked a company, say for example, say I'm just looking into XYZ company. The first 3 tabs will be locked. You can see the first 3 tabs locked. So you can see the unlimited information of the lock. But if you want to unlock, you need to have a credit. Okay, you need to have a credit to unlock a company. So once you have unlocked the company, the same company will be available for you for the next 1 year. You can come here, you can create a team, you can invite your partners, or if you think you want to invite your customers, create a separate team, invite 2-3 companies of their holding company, subsidiary company. Rather than sending all the audit reports or relevant information, you can create a team, add the 2-3 companies or 5 companies which are relevant to your customer. You just share a link, and meanwhile you can also share a company with any of your friends or colleagues. You can just click on share a company and you can input their email ID. So whatever the information which you're seeing, literally like your friend will get without any additional charges. So typically, whenever you are unlocking a company, can you see here, updating it? Typically, we take 3 to 4 working hours to provide the information, back to you. This information was updated 3 months ago. In the next 2 to 3 hours, this information will become as on today. Yeah, this is I believe it will be a very, very powerful tool. I request, all of the members to make use of it, and feel free to reach out to us in case of any kind of clarifications. So what we believe is there is the tool is whoever is using, they're using it extensively, be it insolvency professionals or a chartered accountants. But we see there is some kind of lack of awareness, which we are trying to create within the CA community, so that the tool can be used to the maximum extent. And once again, I really appreciate your patience and time. Thank you for giving this opportunity, and I wish you all the very best.
So thank you so much, Darshan, for this very, very detailed display. And let me just share some perspectives on how this could actually readily be useful for us. So, so I'm going to divide this into 2 buckets. One is you're doing, let's say, a statutory audit, or you're doing anything else like a forensic audit or a diligence, or even for an asset securitization for somebody you want to do a due diligence review. One can use this platform very effectively. So let me start with statutory audit. I mean, that's predominantly what we're talking about. So coming from a statutory audit perspective, this tool or any tool equivalent to Probe can help you to identify related party transactions or related relationships in a very simple manner. Because if you download the Excel itself, you will find the other companies in which directors are interested. So that's aspect number one. So if you quickly go and take that sheet and only pivot based on the companies, you'll know broadly what are the companies that could possibly be related to this entity. So that's one. The second thing, of course, is pending litigations. As I had mentioned before the start, one finds a lot of cases where litigations are not disclosed. Now here I must add a word of caution. Probe picks it up from a public domain. So if your company's name is similar to some other company, it's quite possible that a platform like this could throw up a false positive. But that's better than a negative tracer. So if I, for example, have a company starting with, let's say, AEVER, Avero, and if there are multiple companies called Avero, it's possible that such entity litigations could also come into this, which is why they have a disclaimer that says you need to check. But I find that the litigation is quite neatly classified. It tells you which forum. Is it High Court? Is it Supreme Court? Is it DRT, DRAT, NCLT, NCLAT, etc.? It also just tells you the status of the case, whether it is pending or disposed. I think it also gives you the last hearing date, and it gives you broadly the name of the petitioner and the respondent. Now, again, there are two things here. See, the management primarily, now since we're talking about litigation, management is expected to disclose to you all pending litigation. So if the management gives you a list, now what's my audit procedure? One is to accept what the management gives and take a representation letter. But do I want to just stretch that little more? So when I stretch that little more, you can compare this list with your management list and ask managements for clarifications. Some of us who do Section 29A reviews, due diligence reviews, etc., when we ask for related and connected parties, obviously a resolution applicant in an IBC process provides that. But I've been able to go into this and say, look, what about this company, this company, this company? All your directors are connected. So that's your advantage. And secondly, I think this platform enables you to glide from one company to another. So you can go click on a director, find out a company, and then you can go and open that company. So I find that, it's easy to navigate, and I don't know whether Darshan told you, but we do have a concessional rate for ICAI. It's what I think he showed you was perhaps the standard slabs, but you can look for that. And the third thing is before you accept a client. So even for your SQC1, when you're talking about client acceptance checklists and client continuance checklists, client acceptance checklist, it gives you a very nice synopsis. Now, MCA, it broadly plots out all the balance sheets that are available, I think from 2014 onwards. So you have a 9-year balance sheet which gets summarized. So I think this is a good point, a start point for any review engagement or for an audit or even for a forensic that you want to do. And it sort of hits you in the face because when you see the balance sheet, all the big items of the balance sheet here, you will find that suddenly there was an inventory of 100 crores. There is no sale which has gone up, but the inventory next year has gone down to 20 crores. So you know internally to look for that write-off, which you would do very intuitively. So these are just some of the broad things. And again, I'd like to reiterate that it's not the only tool in the market, but it's the only tool that came up to ICAI. But if you know of anyone else who provides these services, our endeavor has always been able to expose the audit fraternity and the corporates. Now, talking about corporates, possibly, how is this useful? You are going to onboard a customer or you're going to onboard a supplier. It's very helpful to understand whether what he's saying and what is there in the MCA documents are the same. Similarly, stuff like things like charges, etc. When you go and look at the incorporation documents, etc., they are simpler. Now, obviously, you can download this whole thing from MCA, but it's not so easily stratified. So some of these, I think, helps us to save time and makes you more ready for the market in that sense. So thank you very, very much, Darshan. These are some of my perspectives, and thank you so much for presenting here today.
Okay,
so if anyone else has anything to add, Shreyas or Satish, you may, and else we'll wind up.
No, I mean, I was just going through the tool and I had registered a little earlier. It was quite interesting for me, at least. So yeah, very good information which we get from the corporates.
Thanks. And unfortunately, no such tool is available for LLPs and partnerships. LLPs, I think it is there, but partnerships and proprietorships, etc., There's very little data.
To,
And again, it gives you some interesting things like the CIBIL reports and your credit rating reports. And suddenly when you open it and then it says rating suspended, then it helps you to identify those red flags that are relevant for any engagements that you do.
Yashiva, just to add to it, the LLPs, the data is available, but however, the partnership and the proprietorship we've been working on. So probably sooner than later, you can see those information also on the Probe 42. The work is happening at the back end.
Sure. And do you have any tools for strike-off companies? Today, the Companies Act says you got to disclose all relationships with strike-off companies for which values are there in the balance sheet. So how do we look at strike-off companies other than going one by one?
Okay. See, what we do is, I think I also mentioned, like, currently what we are doing is as a kind of a offline service, people can reach out to us with their supplier list, be it name, SIN or a PAN. We have a tool at the back end. We upload it and we provide them the statuses, whether that particular company is active or a struck-off company.
Okay, sure. And that would be helpful for those who are very, large number of vendors or customers whom you want to do this check on. So if it's only 10, 20, 30, then it's easy.
Yeah.
To do one by one. Yeah. So for bulk searches, it would be useful. Yeah, sure. I'm sure they'll be in touch with you if they need something.
Correct.
So thank you very, very much.
Just congratulate the technology behind Darshan's company. It's a tremendous use not only to your profession, Supriya, but also to ours. So thank you very much for your entrepreneurial energy.
All right.
And again, thank you, Supriya, Satish, and Darshan. Thank you for the opportunity.
Thanks. Thank you so much. And thanks to each of the 1,475 participants for staying back. Thank you.
Thank you.
Thanks, Shreyas, and thanks, Satish. Thank you so much, Sarika, as always.
Thank you, ma'am.